Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Kinahan, chief market strategist at TD Ameritrade, to discuss the latest investor movement index reading, or the IMX, to TD Ameritrade's proprietary behavior-based index, aggregating Main Street investor positions and activity to measure what investors were doing and how they were positioned in the markets. It's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill. You know I love being here. Thank you very much. And happy International Women's Day today, Jill. You've been a mentor to a lot of young women, and so for people like you, it's a great day.
All right, and I appreciate that. And of course, to all of the fabulous women at TD Ameritrade who are pioneering the way as well. And let's talk about the IMX, increasing to 7.55 in February, up 9.26% from its January score of 6.91. So it looks like clients continue to take on more exposure in the market. Give us an overview.
Yeah, absolutely, Jill. And, you know, in a month, it was very interesting. What we've continued to see is a pattern where in 2021, clients are willing to take more risk. And they came out in January and we saw the IMX go higher. And in February, what's really interesting is you said up over 9% when the S&P 500 is up just over 2.5%. Part of this being the fact that the index does measure volatility. Volatility has increased a bit. We've seen, you know, with all of the events we saw in February, from meme stocks, et cetera, to the market moving up and down quite a bit. And I think our clients are going with the fact that when we dipped, it has paid off for about the last 8 to 10 years. And we continue to see that pattern today. Dips bring out buyers, and it's very difficult to say to people, you got to be really careful. You got to be really careful because it just has worked so well over the last few years, Joe.
And TD Ameritrade clients were net buyers of equities and net buyers overall. What were some of the popular names? I see a Reddit name in the mix there as well.
Yeah, so Apple leading the way again, Jill, is one of the stocks in there. Tesla being a stock that our clients very much like. And so, you know, you look at those names and you say, okay, they tend to be names that your clients like overall over time. But I think there's something back to my buy the dip. One of the things that you'll often see on the buy the dip when there's a little bit more is the FANG stocks start to become a little bit more popular along with the stock like Tesla.
And some of the names on the sell side were the COVID-19 trade, if you will. What were they selling?
Yeah, Moderna, Pfizer, you know, Johnson & Johnson. So I think that there's this thought process, Jill, that for stocks like that, it's like in Zoom video. And so I'll start with the drug makers first. There's a thought that, okay, they have done a tremendous public service, first of all, but also what news is better than this? They've gotten everything out. They've done so well. What's the next thing, particularly because so much of their energy as a company have gone toward getting out this COVID vaccine? So as we do come out of this, what's going to be the next thing to drive them higher? Then, of course, Zoom video, you know, with earnings doing very well, hitting highs, people come out then to sell the stock. So I think what we're seeing in the market overall right now, Jill, is sort of this tug of war between we are still at home, but at some point we are going to open up again. Where should I put my money?
And let's talk macro a bit, in your outlook, because investors are now focused on inflation and rates. The Fed says data it relies on still shows inflation is in check, while the global bond market is telegraphing an acceleration in demand. Biden has pulled vaccination projection to the end of May from the end of July. We're seeing an uptick in travel with vaccinations rolling out. Some states are in fact 100% open again. And we have a lot more stimulus coming. So how concerned are you with the economy overheating and the possibility of raising rates to get that stabilized?
Yeah, so, you know, the Fed has still said they're in an accommodative policy. It'll be really interesting to see at their next meeting what they come out with, changing in wording. I think this next Fed meeting is one that has more anticipation than any has had in a long time, because I think we all went into the Fed meeting saying, okay, well, here we go again, same message we've heard. But when you see, you know, we had a 10-year rate at 1.6% today, pretty amazing overall. And especially considering where we were not that long ago, the interest rate move has been amazing. But with that, to your point, you're getting stimulus money. What we saw last week, the employment has picked up significantly. Now, we know that a lot of that has happened in places you would expect to as we open up. That is the leisure and hospitality industry overall. But that's a fantastic sign that we're seeing that. And so, last month when we saw in the employment report construction down, that was more weather related. Those jobs come back when the weather improves. And in February, it was a pretty nasty month across most of this country in terms of weather. So that one will come out. So I think, Jill, I do think that the inflation fears for the fourth quarter are realistic. And so we have to keep in mind, but it will take that time to come through. And we don't know what's going, I think there's one thing at play here. And that is if in the third quarter, people can start to get back more and more, as you said, traveling, doing other things. There's a lot of vacation time really built up for people. And there's a lot of, as one of my friends has said, productivity's never been higher, creativity's never been lower. So with that, the productivity's been great, people working so many hours. Will the third quarter actually be a little of a GDP letdown because everyone just wants to be outside? And I do think that that's a legitimate concern.
That certainly is. And so, think about it. We have all this vacation time. We've been coming out of the winter with this. And
Right.
It's interesting to see if productivity does in fact fall off. That really is a great point.
Thank you. And so, again, it's one of my larger concerns, especially as we see our debt to GDP ratio now at 100%. We have to keep that GDP level continuing to go higher. And to your point, does all this money sloshing around the system lead to inflation in the fourth quarter?
All right, JJ, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, sir.